Hello, 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 everybody. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacino. How is everyone doing? Hello, Waka Waka, posting the Apple results. I'll get to the other Apple results in a second. Won't be in the. I'll have to update the titles of this because I was waiting for them to come out. They release it right as I start the countdown. Good afternoon, Davey. So here we go with Apple. Apple did beat. Not surprising. EPS 120, expected 116. Revenue 80.3 billion, expected 87.2 billion. The biggest thing is that they expect a revenue growth in Q4. Wonder if they expect earnings growth in Q4. To the moon from Coco, Inflation Act of 2022. Let's go. Yeah, the Let's Amplify Inflation Act. Good afternoon, Patrick. Wavy, now that's what you call a rally. Hey, Dr. Michael. Oh, Bob should be on in a bit. Let's see. Amazon, Apple going crazy, and after hours, ES approaching 4,100. Yeah, we're in full-blown rally mode again. And we close. We just got to go off the stats. Listen to Biden's speech today. Reminds me of another great Democratic Party brainstorm. Well, thank you for nice intros graphics. There we go with Wavy with Amazon. Amazon's second quarter operating income 3.3 billion, estimated 1.75 billion. Second quarter operating margin 2.7%, estimated 1.65. I really want to see their 10Q. I really want to see Amazon's 10Q. That one's going to be interesting. Afternoon, Jacob. Yes, Apple declared a 23% dividend. Because they can't buy back enough stocks, so they have to start paying out the dividend. Evening, Anissa. Who's that? I know Intel was down. Are you saying that was Intel? I don't have their figures memorized, but I know Intel missed big, and were down pretty big. I'm not even going to post that last comment by Coco because that's just an absurd statement. Okay, still waiting for Bob. We already had the GDP stuff we went over this morning. Here's Bob dialing in now. We'll get his thoughts. I have some questions for him. Oh boy, having lots of trouble with the mounts. This current streaming setup is way underpowered until I get the new one. Kansas City Fed Composite did beat, and manufacturing index back up. Tomorrow, keep in mind, we have all the PCE price info, personal spending, and then minor Chicago PMI, but then Michigan consumer sentiment, the final. So we're going to see how that, and that's pretty much the big numbers for tomorrow. So those are out of the way. Before PCE, about 30 minutes before the open, and then the consumer sentiment 1 hour before the open for the PCE, and 30 minutes after the open for consumer sentiment. S&P 500, you can see green, especially mega cap green. Only you got Meta being red. You mixed in some oil stocks. Walmart completely pretty much shrugging off. Remember that big gap down with their guidance and margin contraction and everything? Even that's getting shrugged off. It's buy everything again. 25 basis point for the September, and we're back in positive gamma territory. So that means rallies and sell-offs could be dampened, especially rallies because it takes you into farther gamma territory. Tomorrow is the weekly options expiration, but nothing big going on there. So, by the way, we already had Apple and Amazon. We already talked about them. Both beat. Amazon beat handily. Intel, pretty big miss. Did not look at anything else. Tomorrow is big oil day. Exxon, Chevron, Phillips 66. So we'll have to check with those in the morning. And I'm keeping an eye on P&G and Colgate-Palmolive from the consumer and inflationary aspects. All right. So it's just trucking on up. All right, we're headed towards the next. We closed above the 62.5. Statistically, we should hit the 4130 to 41 or 4200 levels, and we're on our way there. Let's bring Bob on. Let's just hit the magic Well, now it's not a Magic Bob button; it's a Magic Bob click because I don't have the button set up on this new thing. Hey, oh, your wall's back.
My wall's back.
All right, Bob.
Yeah,
So
you said you had some questions. I hope I have the answers.
I got questions.
I know.
Oh, let's see. All right, the top's in. Wavy's done shorting. Oh, Roku. I didn't
What?
see Roku. Roku missed big time, down 20%. You're bullish on TomTom and bearish on Mike and Bob. Why? Because TomTom says again this morning it was all TomTom. Stocks always go up. Always.
We didn't say stocks were going down.
No, because I'm in long-term sell mode, but you get the rallies.
I can't repeat enough times, Coco, how many times I've said that we had 5 major rallies while the NASDAQ was falling a total of about 78%. 3 of them were over 10%. 2 of them were over 30%. We've never said, all I've said, and I don't even know if I'd give this to Mike, but all I've said is that I don't believe the ultimate bottom is in yet. And I can continue to explain why. But certainly, we both said, like we talked a couple of weeks ago about how we broke up above the channel. I put on a long S&P trade in the podcast. I also put on a long Bitcoin, which correlates to NASDAQ in the podcast. So, Coco, your information is not correct, my friend.
And just because you're not long-term bullish does not mean you can't take short to medium-term bullish trades.
Right. It's time frames. It's all about time frames.
This is what people don't get. And it's like people, I started on the rant this morning, but I'll continue it this afternoon because I got hit up when I went out with somebody when I went out to the grocery store. It was, you're wrong. You're bearish and the market's up. I said, I'm long-term bearish. It doesn't mean the market can't go up. It doesn't mean you can't take a. It's why I'm so flummoxed. But because people, I keep getting is a long-term bottom in, and I'll say no. I don't have a statistical long-term buy signal yet. But then they'll say, well, does that mean I can't take long trades? And I said, no, you can take all the long trades you want. You have to manage them accordingly. Like if you get a double bottom signal, does it mean you ignore it? No. It doesn't have to be a long-term double bottom. It could be a short-term double bottom.
Yeah, I would go back to a couple episodes of the podcast, and you'll see that I put on a long S&P trade, and I put on a long Bitcoin trade in the last podcast.
There's a difference, and there's also a difference between a rally and all-time new highs.
Right. The other thing I've said, so let's touch on the recession for a second, if we could. Jim Bianco, who I have a ton of respect for, put up on LinkedIn, I'd like to be the first to welcome you to the recession of 2022. All right. That was after the GDP figure. Somebody put up the NBER definition of a recession that we talked about a couple of shows ago. And I told you guys my feeling on it, and then I said it on TD Ameritrade, and then I said it again on TD Ameritrade, then I tweeted it out. I don't care if we're in a recession. The technical definition of a recession is not technical. Okay? It's really opinion. And if you didn't hear us read that definition, we can read it again. But basically, they listed out 4 things that they watch, and they said, Mike pointed out so aptly, they said, recently we've focused on these 2. So that means it can change. If they recently focused on these 2, maybe in the next batch of recently, they'll focus on something else. So within that context, I said, I don't care if we're in a recession. You can go back a month or so ago, and I said, and Mike agreed, that our base case was stagflation. So now you have 2 consecutive PCE numbers. We're going to get another one tomorrow with a 6.3. Fed's target is 2. You have CPI at an 8.8, a 9.1. Fed's target is 2. And you had 2 consecutive quarters of negative growth. Negative growth or stagnant growth plus inflation is stagflation. Stagflation is worse than a recession. Stagflation caused the recession of the 70s. So the reason this particular GDP number this morning was negative, the economy actually grew. But GDP is inflation adjusted. Retail sales is not. So once you took the value, GDP is the value of all goods and services added up. But if the price goes up of a good or a service, the value increases whether you've sold more or not. So GDP is inflation adjusted. If it was a stable inflation, this would have been about a 6% GDP. But because it was inflation adjusted, we got negative 0.9. So if we're going to go with the old definition that I learned in college no longer applies, fine, that's fine. Then let's talk about the NBER. The NBER has never called something a recession while we were in it, not even one time. It's always posthumously. It's always after the fact. After the inflation is over, and stocks have rallied to new highs, and GDP has turned positive, NBER announces that that period was a recession. Most recent example is the pandemic. Okay? They didn't announce the pandemic dip was a technical or an official recession until we were months out of it. And they came out and said, we have just gone through the shortest recession in history because they named it a recession. But we are in stagflation. And the other thing I would talk about is there is a technical definition of a bear market. A bear market is a 20% lower close from the recent all-time high. We hit that in everything except the Dow. We hit it in the Russell, we hit it in the NASDAQ, both of those were more than 30%. And we hit it in the S&P, I think it was 28%. We did not hit it in the Dow. I think the Dow reached like 19%. To get out of a bear market, you have to hit new all-time highs. I don't know how far away that is. Maybe Mike can measure it while I continue to rant. But you have to get up above the all-time highs. So from where we are now to new all-time highs is what, Mike?
Another 17.12%.
All right, so we still have to rally another 17.12% before we are no longer in a bear market. Okay, it's like winter can have a bunch of 60-degree days. But until you get to the date that ends winter, you're in winter. So, main point being, if you guys just want to know, and I know this doesn't apply to everybody, but if you just want to know what we think about the movement tomorrow, I'm probably not going to be around much because half the time I have no idea, which is why I don't put a position on. But if I have a position on, like I did have a long S&P and a long Bitcoin, it's because I have a short-term opinion. But that doesn't take away the fact that we're still in a bear market, the fact that stagflation is here officially, and the fact that it's not a fact, and my opinion that the June lows are not the ultimate low. And I can go into that if you want, but I've talked a lot.
No, I want you to go. I want your opinion. Then I got some other questions about stuff. So I want you to
Okay,
talk because my head has exploded today.
Okay, so try and piece your head together. But in the meantime, I want to point out a couple of things that I think are a problem with the current situation. So stocks are rallying, and they should. Amazon earnings were blowout. They were awesome. Apple's earnings were very, very good. Okay, so big tech is moving. We have earnings as of Friday. Earnings are below the 5-year average on revenue growth. Okay, but you could argue that that's priced in with the 35% in the NASDAQ and the 21% in the S&P. You could argue that that lowered revenue growth is priced in. What I would point to is a couple of things. States are sending out stimulus checks, or what they're calling inflation relief checks. Okay, that's inflationary because that's exactly what caused a lot of the recession. Not all of it. Some of it was supply chain that was built in post-pandemic. Some of it was supply chain and supply interruption by the invasion of Russia into the Ukraine. But most of it, I would argue 60 to 70% of it, was caused by excess money with nowhere to spend. Total value of savings has gone from, this is consumer savings, has gone from over 1.4 trillion to about 800 billion. Okay, people have been spending their savings. All right, and eventually it will dry out. Jobs are still plentiful, but we've heard about hiring freezes, layoffs. Even Apple, who has all the money in the world and had a really good earnings report, they didn't say they were going to lay off. They didn't say they were going to freeze hiring. They said they were going to be prudent in their hiring going forward. Okay, so even them. So I think jobs will start to suffer. I think we'll see a higher than 4.5% U3. That's the unemployment rate we see on the first Friday of every month. I think it'll be above 4.5% before this is all over. What's happening right now is earnings driven. And the Fed helped by saying basically that there's been some slowing. I mentioned in the live stream, I don't know if it was yesterday or the day before, the downslope in both major ISMs in the US, manufacturing and services, started in 2021. The manufacturing downturn started in February. The services downturn started in March. So economic data has been slowing for over a year. William Dudley basically said, and he's a former Fed vice chair, okay? Is he the vice chair? Doesn't matter. He was in the meeting, he was a voting member. He basically said that the Fed is going to suspend guidance because they saw the couple of rallies that happened after their hikes, and it's contrary to what they want to happen. In other words, Mike just pointed out the market's pricing in 25, and the Fed decided not to communicate whether that's right or wrong going forward because they want their rate hikes to actually go into effect. So when the Fed hikes rates 75 basis points, you can assume they have concerns. But then the belly of the curve from the 2-year out to the 10-year yields fall by double digits. So the Fed tries to restrict monetary policy, and the bond market eases monetary policy. So they say you can't fight the Fed. Stimulus checks by states. If they get student loan forgiveness, that's inflationary. And this CHIPS bill is inflationary. I applaud the nuclear component of it, and I applaud the thought behind getting the chips to be made here. But there's no, at least that I've seen, there's nothing in the bill that forces these companies to get all their supplies from here. It's just corporate welfare for some of the richest companies in the world to build the chips here. So what does that mean? Hiring, jobs, inflationary. So when they say you can't fight the Fed, all of these things are trying to fight the Fed. So the Fed is trying to explain to us, and I've said this before, that the Jerome Powell Fed has done what they said they're going to do. Okay, they always say it and then they do it. And you ignore what they say at their own peril. I think they're trying to tell us we're going to fight inflation. And the fiscal side is pumping up inflation with policy. So if you think the Fed is going to slow down, or as Jimmy Iorio keeps calling it, a pivot, drives me crazy. I'm going to kill him on the podcast tomorrow. If you're hiking rates at a 75 basis point clip and you decide to stop hiking rates, that's not a pivot. It's a pause. A pivot would be you turn from hiking 75 to cutting 25. That would be a pivot. But anyway, if you think that's going to happen, I would wait till the Fed tells us that that's going to happen, or I would wait till you see inflation. And let's go with the PCE, since that's what Jerome Powell said they look at, and that's what he said they base their 2% target on. PCE was at 6.3% last. Unless you see it with a 3 handle, maybe a low 4, but a 3 handle, man, it's tough. It's tough if they're saying inflation is, they're going to continue to fight inflation. They're trying to tell us that, but they're going to suspend guidance. Yeah, that's it. So I'm not trying to scare people out of longs. Again, I'm currently long the S&P and Bitcoin. And if you guys think that I'm just saying that because we're doing this now, listen to the podcasts. Those trades on Friday, we tell you if we're in them, looking at them, or plan on putting them on or not. I'm very upfront about it. So they're recorded. It's there that I did that. So anyway, Sorry, Mike.
No, I have a question now for you.
Yeah.
All right, so first of all the talk that we're not in a recession. We're not in the technical recession, but all the shrug off with the 2 quarters of negative GDP. The
Mhm.
Fed, as by Powell, says we're at neutral.
Mhm.
The White House economic advisor says what was it? The Fed should pivot at neutral.
It's
A
not a
lot of,
pivot.
huh?
Go ahead.
Oh, and it would be I don't know what they
It'd be
mean
a
by
pause. Okay.
pivot. I'm not saying the Jim Iorio pivot. I'm saying that's the word they used, but I think it was more of a pause. So you could get it to neutral. The economy is still at 2 quarters of negative growth, which I would not say is not due to the Fed so much as due to inflation just ravaging the lower ends of the consumer.
Mhm.
Uh, how do you? All right, if you want the Fed to pause or start easing next year, you got it to neutral. How do you get inflation out of this economy? Because all right, if we just have a somewhat of a mild recession or even not recession, whatever you want to call it, how
I am
how do
from
you get
now on going to
inflation?
use the not recession. That's my new way of talking about it.
How do you get inflation out of the system?
You have okay. So first of all, we've never had 2 consecutive quarters of negative growth and not had an official recession. It's never happened.
Fine, I don't care what you call it. Again, we're good.
Agree.
The not
Agree. I
recession,
agree.
recession,
I
whatever.
agree. We have had recessions without 2 consecutive quarters of negative growth. But we've never had 2 consecutive quarters of negative growth and not have a recession be named again posthumously. It happens after the fact. You can only eliminate inflation in this. We could say generally inflation is still, was, and always will be a monetary phenomenon. I said that to somebody and they're like, no, this one was supply chain. Okay, so what did the restrictive supply chain cause? It caused more money to chase too few goods. Well, we printed a lot of money. That's what it was. Okay, more money chasing a stable amount of goods. It's always monetary. So the only way for the Fed to combat inflation is to tighten conditions. And when the bond market subsequently looses them after the Fed tightens them, that's the bond market fighting the Fed or believing that it's going to work. But I don't think it's that personally, just because the yield curve is still inverted. The only way to get rid of inflation is to end up in a situation where there's more goods. Okay. So, this is why I say this CHIPS Act is all about building toward a future of a better supply chain. That doesn't happen next week. The opposite happens next week. It's very similar to the effect of the green energy movement causing fossil fuel prices to rip because there was no transition. Did I answer your question? You have to slow demand or you have to increase supply, and slowing demand is the only thing that the Fed can control.
So again, if they're not supposed to raise rates or pause or do whatever, how is inflation getting out of the
They
system?
can't. And this is just the thing. I mean, if you slow the PCE gets to 4% or 3.8, right? I would argue the PCE has to go below, but whatever. If you get it to 4%, okay, and you don't get GDP up to 4%, you're still going to have negative GDPs because GDPs are inflation adjusted. So that will still be stagflation. And that is crushing to the middle class. It's absolutely crushing to the middle class. Maybe stocks go up. Stocks usually rally with inflation, all else equal, with controlled inflation.
With controlled inflation, but
With controlled inflation.
stagflation. I mean, look where stocks went in the '70s. So they had
Right.
rallies, but they also went pretty much nowhere for a decade.
So we talked about this before. We had Ryan Dietrich on the podcast, and I called him what did I call him, Sterling? Is Sterling in here? I don't remember what I called
Seen
him.
them yet?
Um, I called Ryan Dietrich Dr. Optimism or the king of the something. Here, I'll actually be able to tell you in a second. But anyway, um, Ryan Dietrich is the king of positive spin because what Ryan Dietrich does is when stocks are suffering or when something happens, he goes back and finds all the times where it didn't matter. And it's very valuable for his job because he works with advisors who are trying to calm down clients, right? So it's a really, really good service. And I remember mentioning to you guys that you should follow him if you don't, because he's absolutely the voice of reason. That's what I called him. He's absolutely the voice of reason. So when you look at it from the perspective of what's happened in the past, the only time that equities did not rally in an inflationary environment is when we had stagflation. Ryan put up a chart of all the times during an inflationary environment equities rallied. And it was like 3 months, 6 months, 12 months, 18 months later. And the only time that you had multiple negative performances by the stocks in there, because I took that chart and then I went back and added all the GDP prints as well, was when we had negative GDP prints. So stagflation has proven historically to be bad for markets, really bad for markets. So you got to get the inflation down. You have to.
And again, if it's
And
see,
by the way,
I don't see if we get, especially if we start getting entrenched inflation,
yeah.
and then you get the sort of the inflation wage spiral, because real earnings are still down.
Yep.
Which hurts a lot of people. I mean, it's especially tilted towards the middle to lower end of the spectrum, but it still hurts a lot of people.
Yep.
And long term, that isn't a long term. When people have less and less and less money to spend, it's generally not helpful for expansion of multiples in the market.
Yeah, I mean, we had look. Somebody again talked about. Oh, it was Carl Quintanilla has turned into just a complete shill. He's such a nice guy, so I don't ever say anything to him. I did once. He put up a chart of 5 days of gas declines, and I responded with a chart of 18 months of gas. And I said, dude, seriously, you're going to put up 5 days of declines? Well, recently he put up a tweet where he said, things can happen very quickly. Gas over the last 4 weeks, and it's a down arrow, right? So I looked and I decided not to reply to him because he's a super nice guy. A year ago today, regular unleaded was 58% lower than it is today. 58% national average. And this goes back to my whole conversation about no matter how low inflation goes, because again, when we're looking at inflation, we're looking at the change either year over year, month over month. The core level of the CPI index is still way higher in a way shorter period of time. And just because the growth of inflation goes from 9.1% to 5.1%, it doesn't mean that that 4% was a drop in the index. It means that the index went from here to here to here. So it's still prices, and unless you need time to get wages up to match that. Anyway, any questions for me?
Yeah, there's questions.
Go Wavy. Are we clear? What's the movie I'm thinking of? Are we clear?
Well, here, see, Wavy said before, yes, but by all-time high, you missed most of the rally, right?
That's if you think the all-time high is the forever high. Wavy, do you think it's not? So first of all, I'm long now. Okay. So no, but I'm saying you're acting wavy, and I mean this with a tremendous amount of affection, but we've been doing this for a long time, and we get these same questions. A bear market doesn't mean you have to sell the market. A bull market doesn't mean you have to buy the market. These are just, I honestly think we should stop using them because these are just classifications of what the market is in, okay? The market is in a bear market right now. So if somebody says, oh, stocks are up, we're out of the bear market. Technically, no, we're not. So that's number one. Number two, is this an ES chart, Mike? What is this? I can't see it.
That's a S&P. Yeah, it's S&P.
Can you go to post-pandemic? Just right, the pandemic and then post-pandemic. Okay, so by Wavy's argument, the move from the absolute low, which nobody ever buys, I've been doing this 30 years, 29 years, and I've bought the low and sold the high 4 times. And the last time I did it was 12 years ago. Okay, so nobody ever buys a low. If you measure the move to the previous high from the low, the all-time low, how much is that?
So you want
Approximately.
from here back to
Yeah,
here?
yeah. How much is that?
That's 56%.
56. Okay,
Up.
now from the pandemic high to our most recent high is how much?
The pandemic high
I'm
to
sorry, the pre-pandemic high. My bad.
the pre-pandemic high to the most recent high.
Yeah.
The
You already seeing what I'm trying to tell you here, Wavy? Just from the look of it?
the all right. So from the pre-pandemic high to the most recent high was 41%.
Okay, so you didn't miss most of the move. Okay. You just didn't. Now, also in the pandemic drop, we'll just use that as an example. There are several events in there where people thought it was the low and they bought and it kept going lower. It's probably a lot more clear in the NASDAQ decline in the 2000s, but I don't want to put Mike through all the shuffling that'll take.
Oh, I put me through
Um,
it, Bob.
okay, so let's go to the 1999, and it was about late 99 to 2000 NASDAQ, 2002 NASDAQ.
I'll go back as here we go.
There we go. Look how many times people thought it was the low and they got in because they didn't want to miss all of the move, as you just called it. Look at it. We
Well,
just kept going lower.
1, 2, 3. I remember a lot of these moves.
So do
4,
I.
5, 6, 7. Even some of these 8. I still remember these little mini bounces. We'll just go off the
Yeah,
bigger one. There's like 8 or 9, literally,
right.
depending on the size. And this was the
And then
ultimate
the
low.
Nasdaq basically doubled, right, from its old all-time high, approximately from 4,000 or 5,000, whatever that was, to well, it did more than that. It more than doubled. But the point is, Wavy, that if you want to get in, and by the way, I'm not telling you not to. I'm currently long the S&P, and I'm currently long Bitcoin. Okay, but as trades, not as the bear market's over, I'm out. This is when Mike talks about trading around a position. It's exactly what I'm doing right now. I have a long S&P position, and I'm trading around the fact that we're in a bear market. So theoretically, and Coco just said this time's different. But
I'm
theoretically,
booting people.
well, I think he's being sarcastic. At least I hope he or she
Well,
is.
he's short us, so it doesn't matter. He's long Tom. He's
Okay.
short us. So
Why can't you compare 2000 with 2022, Coco? I actually would love an answer to that. I don't know why you can't compare those two. Is it because there was no inflation in 99? I would say that's better. you know, I'm not sure why you can't compare that. I tell you what, if you can't compare current price action to past price action, Mike and I should just quit.
it, again, nothing repeats exactly, though it does
No.
rhyme. It does rhyme. And there's always nuances that are slightly different. I mean,
Yep.
it's not like a broken record that just keeps skipping back to the same place, but it's like the record player that one or let's say you scratch a bunch of different records in the same way, you put them on the turntable. They're not the same record, but they're all going to skip when they hit that point.
Right.
Hold on. Well, funny, in 1999 they said the same thing about 29 and 69. Again, I hear this all the time. It's different this time. It's always different until it's not.
Oh, Jesus Christ. There it is. My brother just posted.
What? Oh, John. I can't believe you are long Bitcoin. Just give me your money.
It's a trade.
It's a trick. Again, I am super bearish long term on crypto until we get flushed out. What have I
Same.
been talking about recently? We're still getting the bounce. Would I put my life savings in Bitcoin? Absolutely not. There is no
Actually,
friggin' way. Just like I won't
actually,
put my life savings in this market at this point. But there's a
I'm gonna
trade.
I'm gonna send something to my brother. It's my TD Ameritrade hit from today. As soon as I get it, I'll put it up on Twitter too for any of you that ever watched that. But I told the guy that I was long Bitcoin. I told him the same thing I just told my brother. It's a trade, and my target is 26,400. So like I didn't buy it to hang on to it for weeks and months and years. I bought it on a breakout of the horizontal channel. We got a nice retest, and it's coming back up. So I'm getting out about 26,400. Coco says because in 2000 people lost faith in tech. So are you saying they can't lose faith in the Fed? That's impossible. Do you think that they can't lose faith in the ability for people to afford things that are 9, 10, 12% cheaper? Actually, ask my brother about inflation because he owns a restaurant. Holy crap. It doesn't matter, Coco, what they lose faith in. It just has to be something related to the markets. I mean, if that were the case, Coco, the NASDAQ would not have been the largest fall. This particular move down, the NASDAQ had the largest fall of the three major indices. So if you think that people can't sell off the NASDAQ because they won't lose faith in text, yeah, they already did, kind of.
Well, I want John to attend more regularly. This
He
is
attends a lot. He told me recently he said something, he texted me something, and he goes, "No, I just really like yours and Mike's analysis." And I said, "You should say something." He's like, "I don't want to." And now he did. He's
all
making
right.
fun of me.
Well, shout
That's what
out
he
to
said.
John Iacchino. All right.
Yeah.
I won't. I guess he's off the boot list.
My my brother's been investing in stocks since the old Value Line books. Remember those?
I remember the Value Line books.
He used to study the Value Line books.
My dad had the Value Line books. I remember him sitting at his desk, when he'd come home, especially on the weekend, Saturday morning. Well, or really Saturday afternoon because he'd play golf in the morning. But he'd come back and whip out those Value Line books and pour over them. And ah, let's see. Question here though. I hold on. Options 22 way back when. Curious, is the overall market heavy with shorts, puts? Source, where can we find this information? Are the shorts propelling this crazy market?
You're asking about what the positioning in options is?
Well, here let me jump in with that first. There's
Yeah,
we
I would
we've had
ask Mike.
some rip your face off moves with shorts in the insane stocks like I'll put them the crazy Kathy stocks. But
Mhm.
those shorts have been lightening up. Now it's generally there's a lot of money that's been sitting on the sidelines that's now been put to work, especially with the Fed's and a lot of people I've talked to, and this is why I mentioned this the other day. If the Fed was going to say data dependent, because I heard even before, the thing was, if they were going to stress data dependent, we're just dumping our money back in because at least we have a couple months of a potential rally before the next hike, and we think they'll pause, not pivot, going into the midterms, and they won't hike, so we could get a really sustained rally. So we got to put our money to work now because we have so much sloshing around. And now it's hand over fist, money's chasing each other from funds.
Yep.
You did have some short covering earlier on in this move, but now it's pretty much new money and stock buybacks. Remember, stock buybacks. The blackout period ended, and there is a ton of stock buyback money too. So yeah, that's interesting. Bob, here, Connor asked, Bob, what are your thoughts on Biden saying that big companies won't be able to avoid being taxed and they'll have to pay a 14% tax no matter what? Do you think that will hurt big companies at all?
So I don't know what legislation has that in a 14% base tax. I don't know that passed. I think that's a presentation, but I'm sorry, a bill that's being sort of tossed about. By the way, on the political front, the Republicans told Chuck Schumer that they would back this particular CHIPS bill if he promised not to do reconciliation. And then as soon as the CHIPS bill passed the Senate, Schumer announced he's going through with reconciliation. So that 14% might be in that reconciliation bill. You watch them avoid it. This is the thing. Trying to get money by the point of a gun, generally somebody either points the gun back or they figure something around it, especially the people who fund the politicians that are doing this. So that if that passes, and again, I didn't see the bill, it may have already passed, it may be something that's in discussion, it may be in the reconciliation, but they literally just passed basically a tech welfare act, which is part of the reason we're rallying, right? We're rallying in part because they passed the richest companies in the world, the tech companies, especially the chips maker, just basically got corporate welfare. So I could see them getting that and then paying taxes for a couple of years until Congress and the Senate and the presidency switches and they repeal it. I could totally see that. But yeah, it won't hurt big companies in the tech space, that's for sure. I got a question for Tom. Did he just start trading this week?
Oh, it's Tom. Hold on. We'll get to him in a second. Hold on. Else I'm going to lose track of stuff. Christoph says the spread between the 5-year and the 2-year yield is tanking. Why doesn't it bother the market? Isn't that a crystal clear recession sign among all the others?
So the 2s, 10s is the more popular indicator of recession, and that's actually come back a bit. It was negative 26 basis points. It closed today somewhere around negative 19 or so. I'm not sure. I don't even track the 2s, the 5s.
Here's
2s,
the 5s, 2s. I have it.
Okay, the 5s, 10s is negative 4. But here's an interesting thing. So the 5s, 30s, okay, which is most of the yield curve, got as high as negative 13, negative 14 on a settlement basis. It's negative 4. The 2s, 30s was negative 8 on July 20th. It's positive 13. And the 10s, 30s was negative 4. It's positive 32. So there's only the belly of the curve that's inverted now. Now, that's the most important part of the curve. Okay? That's the most important part for our recessionary indicators, for the correlation to a recession. And I would argue we're going to find out that the 2s, 10s was right again. Right? So, yeah, that's where that is. I think I answered the question.
Can Apple break out to new highs without the rest of the market? Well, anything can happen. I mean, hold on, though. I wanted to point this out, too. You know, everybody's worried about, with the bear market and everything else. What triggered, even on the weekly basis, because this was posted, this was asked about, this was posted, this is the exact same chart. Look, and I haven't covered it for a couple of days, but you could go back to the stuff last week. What happened? Double bottom triggered in Apple. Here are your targets. Nothing's changed with this chart. You can go back and find it. 161.35, 166.14, 170.87. This is my whole thing. So, can Apple double bottom triggered? It triggered on the daily and the weekly, and you even got the pullback move into the Fed meeting. Now they have earnings. They're back above the first target, and they'll probably hit the second target tomorrow.
Yep.
Can you take a trade, a bullish trade? That's why it doesn't really matter. What a bear market means to me is I don't just put on a bunch of positions and just walk away for 6 months and not glance at them. Because within a 6-month window, anything can happen. You can put on trades. You know what? It's already hit the stop production. Even if it comes back down a little after hours, it'll hit it tomorrow morning. So what do? You move up the stop. Does that mean I don't, like, if Apple finishes a double, it's done. It's a done trade. It doesn't mean, can it still go to highs? Yeah. You know, there could be another trade, closing above the 62.5. It could, then it targets, which it looks like it'll do tomorrow, then it targets the 173.45 to the all-time highs. So could that still go up in a bear market? Yeah. So that is a trade. And that's not even the if you want the all-time highs, you'd need the close roughly where it's sitting post market. You'd need that to close tomorrow, and then you'd favor 176.20. So could this go up there within a bear market? Yeah. So I think people are missing that you can take trades, you can be bullish on stuff, you can play patterns. But what it means to me is I tactile trade. I don't just put on stuff and go on vacation for 2 years and hope it's going to be higher. Because if you don't manage positions in a bear market, you can literally get your portfolio ripped in half.
Yep.
And if you get your portfolio ripped in half, that takes you to double the remaining amount of it to get back to where you were. So that's why I stress tactile trading isn't no trading. Tactile trading isn't. We've had longs up here. ARC is a friggin' double bottom. Do I like ARC? No. Could it stop out? Yes, but it's a double bottom. Could it go to this? Could it go back to 58.23? Yeah, because the probabilities favor that versus new lows at this time. Do I like ARC? No, I think it's a bunch of junk. Could it go to the target? Very easily. You got to separate this. This is where my head's exploding because people think, oh, because I don't have a long-term buy signal. It doesn't mean you can't short-term or medium-term trade. It means don't just put stuff on and stick your head in the sand for the next 6 months and hope your portfolios could survive.
Right.
See, and then we have TomTom, all-time high coming in.
TomTom's a talker. He's messing with you guys.
Yeah, look at the market green. It's not green every day, though. You know, and I'm going to respond to this because people see these comments, and this is very dangerous.
TomTom's trolling. He just admitted it.
I know he's trolling.
All you got to do is pull the chart to the right and look at it from. I said in December last year that NASDAQ was going to fall about 35 to 45%. It fell 32. So clearly stocks don't go up all the time. He's just messing with everybody.
Why I'm going to stop putting up those comments, though, is because newer people see those comments.
I know. I don't want them to put their money into it.
And you know what? That's a very, yes. And I've said this before, and I'm going to respond because we're getting more and more new people here.
Yeah.
And it's a dangerous thing to propagate because there's so many channels out there that propagate that the stocks only go up. All you have to do, and then if they go down, you just buy more of it. And you buy more of it. And that is a...
They make videos when stuff's up saying they told you so.
Yeah.
There's a guy, and I'm gonna leave his name out. He actually told me in a bar in Chicago, he was asking me to join his group. And he told me a bar in Chicago that basically he lets people pay him money, right? And he gives out his options calls. And if he loses money for the month, they don't quit because they want to try and make the money back. But then on the months that he makes money, they stay because they want to keep making money. And his entire trading account is made up of what people pay him for membership fees. And he doesn't care when he loses because he gets another month of membership fees the very next month. So his trading account was fully funded by membership fees, and he just puts it all on the line in high beta trades, and he loses most of them. But the vast majority of people stay because they want to make their money back the next month. And I'm like, it's nice to meet you. And I left. But that's what he does. He touts his returns when he wins. And he touts them all over Twitter and social media everywhere. He's like, I just made 300% today. I just had 10 winners in a row. Bunch of people join, puts that money in his trading account, takes a bunch of crazy trades. If he loses, they re-up because they want their money back. If he gains, they start telling other people how great this guy is. And then the next month he loses, and a bunch of those people don't want to quit. So it's literally like the worst kind of churn because he knows he's taking these low risk, high reward, low probability trades, and he sucks people in with his last winner. It's horrible. I'm not going to say his name, but if anybody comes up with it, I'll tell you if it's him or not if you say it. But anyway, I got to run.
Now, Amadeus asked one question. Am I wrong to be waiting in cash for the next market low?
No, I don't think so. But let me just put a little bit of a caveat on the wrong. Okay. If you're willing to risk a certain amount and you can manage that risk, you can buy whenever there's a long signal. Okay. Because I think there's going to be one more low. That doesn't mean I'm right. Okay. I don't think the June low is the low, but I certainly could be wrong. And I wouldn't want you to say, well, I took Bob's advice and he was wrong, and therefore I missed all this, right? You have to follow the price action. If you're just saying, I'm going to invest at the next low, and that next low is a long term sell signal, that's not going to be the last low. So you're better off just following the price action.
Let's see. Hold on. Uh,
I
wavy
got to go. Oh,
folks
go
are
ahead.
buying hand over fist. Turn on the casino lights. Even my grandma's going long. Nasdaq and S&P.
All right. I got to go. Tom, have a good day, buddy.
All
We'll
right.
see you guys. Wavy Coco, all good. We'll see you guys later.
Okay. We'll have to. Bob's done. All right. It's been a long a long session. Thanks, Christoph. You have a great evening too. Where are we sitting? My Nasdaq target is 10,400. Sounds crazy, but I know it'll hit soon. I'm not even going to respond to all this. Your Nasdaq target is 20,000 by tomorrow. Good luck with that. You know what? Hey, you go. I bet you Nasdaq 20,000 call strike are really cheap right now. So you could just put everything on that. So where do we sit? Let me go over my price action. We got the move of we got the close above 62.5, return to breakout level. We've just essentially closing in the 87.5. So we still have some more upside, 41.33 to 4200 is the next key area. We paused briefly before the Apple and Amazon earnings. You see we hit the target cluster at 40.75, 40.76 area. And now it's essentially, let me take some of these things off. So again, key support, we're back into a vacuum again. Remember, end of month. 4,043 to 4,050 is your minors or your pretty significant support. And you're going into remember we had this clear path move. You can see it here with very few stopping points. You can see it here easily on the daily. So we've exceeded that. Now we're into a very choppy area going into end of month with the overall target range up here and entering overbought condition on the daily. So going to be watching for some more follow through tomorrow, but the targets we got about 41 exact 41.3175, and then above that we'd have to use a minor pausing target, which we don't have a good pausing bar yet. So I'll have to update that tomorrow morning. NASDAQ, we finished with that little pullback today. By the way, if anybody was wondering, I'll just show you on the NASDAQ. I don't need to go through this whole thing. We get back down to the shorter term. This was essentially a double top shake and bake pattern. Closing really briefly below. Then you have the move back above the 62.5, okay, which then favors a return to that high area and then the breakout. So again, triggering a bunch of stops and then the shake and bake. So if you get short here, this is, again, a good thing to memorize. It's not just on a horizontal channel. You can get it on something like a double reversal where you can get sucked in one way and then reverse the other way. You get above that 62.5, you target the highs, you get a breakout from the highs, and then you target the harmonics higher. And you pull these levels off. So next, again, we don't have a lot of great, fantastic levels. The core pullback level about now is 12,730. It's 12,725. The next levels on a continued run up. The next major level is 13,223 minus 13,106. Let me just get through the double. The head and shoulders on the notes that triggered yesterday, followed through a bit today. Bit cautious. Again, we could get a pullback. So if you're trading this very short term, be prepared for a potential pullback and then another rotation higher. Remember, this can take a while to play out. Okay, your major support now coming in about 119.18. Crude, still reaction on the other side of the rotation zone. Coming in, still in consolidation. Nothing doing yet on crude yet. I'll take a look at that, but there's no trade right now. Natural gas, said if we broke below 837, watch for the pullback to the rotation zone, which we did. There's just no long trade yet. On a continued drop, pullback, your key support is now 755 to 751. There's no re-entry buy signal yet. Gold, again, it looks like we're getting finally the breakout. I'm watching for the backfill move and then the rotation back up for a long trigger, but this is definitely chasing down the stagflation play. Dollar index still caught in the range, which is actually really interesting because the dollar index is holding up remarkably well even with this rally. VIX, as I said, once we started breaking down again, by the way, the potential double bottom is still in there. You still have to be prepared. But getting the close below yesterday's low. So still watching for some upside follow through even with this move in the VIX. Next major support is down at the 2025 area. So still supporting a follow through move there. Bitcoin coming up to that channel line. A continued power move in the NASDAQ. Again, as I said before, the next target is roughly 24,950 to 25K. You get above there on a closing basis. The next area would be about 26.8. Again, nice recovery rally in Bitcoin before the next potential big rollover play. Weekly cycles at the top, but daily cycles have a little more room to run to the upside. Tesla, actually enough, you had the bullish, you get the real nice gap fill in Tesla. You do have a potential double top. If you get followed through tomorrow, though, remember your target is the gap fill play from back on the 6th of May at 865.65. Let's just check in again. Apple, as I said before, there's still the bullish play. I'd actually be the 200 is now support. It's pulling back a bit, but again, it would regardless. Normally, I like to just do price action from the day session, but since it's popped above it and it's pulled back, it would be raise the stop on this little move. I don't know where it's going to open tomorrow, but the raise the stop, I'm just giving a rough estimate. This, based in the market conditions, I go with the more aggressive stop being around 149. And the 200 should now be support even if it fills the gap, should be support. But I'd be watching, again, if another rotation play lower. It is running out of a little momentum, but the next targets are 166.09. So that's where I actually make the target 165.95. I hate targets on the other side of round numbers because there's so many resting orders right at that round number. And you have this key close at 166.02. So just a little advice from years of doing this: 165.95 or even 165.90 is a more suitable target. It doesn't change your reward to risk that much. And then 170.87 right by this topping area. So there is more room to run in Apple. Amazon, which the earnings were good. They weren't that big a stellar blowout, but I will be. It's going to fill this gap left behind. Remember, you still have the super gap. The super gap, if you're still trying to play for a more bullish play in NASDAQ, really goes into rip your face off rally mode, 145.94. Raise stop, though, if you're doing something before then, I definitely focus. Too many people focus on that gap down open price of about 142.18. And it is filling this prior gap fill also. The key was right there was 138.17. Longer term, I think this is a gift for another potential rollover play. Once we start to get some waning momentum, there'll be a really nice downside gap to play for. But before that downside gap, I would not ignore. There's a significant level right in that area, right around 125.50 area. So that would be the first target on the downside gap. So where do we sit? Where do we sit? Just I'm just looking to see if there's anything else. By the way, let's just peek at they should have decent earnings tomorrow. Exxon, remember? See, this is it's pretty much post market. Now I'll give you another little tip. When something like this hits ahead of earnings and it completes a pattern like this double, even in post or pre-market, if you can get out pre-market ahead of when they do the earnings, I like to unwind the position, especially when things are in overbought condition, just because even if it matches earnings, you could get a little sell pressure in there. So that's just like how I like to do it with that double is complete in Exxon. So let's just call it a day at this point. We're still arguing with, what are your settings for the stochastic RSI? It's a June 21st video. It's roughly 833. So NASDAQ weekly dollar, I think that extended too far. That looks like it's extended too far. Come on. Yeah, that's extended too far. That's not a NASDAQ weekly double. So you can't use those targets. So again, if you're playing the breakout play, the next key target is 13,212. I just make it 13,200. Next target after that is 13,500. Based as this key resistance ledge, and there's a significant level right there. I just don't have it on the chart. And then the next level is 13,936. I keep mentioning your long-term buy and sell signals for the market. I can't, because it's a proprietary thing that I don't have the rights to share. But if you want one I can share, you want a different one, watch. I'll let you know if this will be more. I'd put this more in the medium term category, but you start getting it close above 41.85 on a weekly basis, you can go into more aggressive bull mode. As long as the bottom line's above zero. So that's one you can utilize, and I can show you that on the chart. All right. What are my thoughts on RBLX? I mean, RBLX still has a double in play. Nothing's changed. It's stalling out at this first target. You still have 45.84 to 48.98 are your next targets higher. This was a stop reduction target. So it's still, you're playing the double play. I'd actually keep your stop at this point. Your conservative stop is 30.26, but you don't really want anything right now based off just price action. This is where I'll use a discretionary higher stock. 35.95. This is 36.08. That's a 37.5% retracement and the prior breakout level. This spike low and it takes you below the rotation zone. But it's still, RBLX is still a long trade. How often have you seen bear markets turn around without capitulation? Which I covered this the other day. You don't have to have again, you can have short-term capitulation, medium-term capitulation, and a lot of times bear markets don't turn around with a long-term capitulation. They generally fizzle out. The market in the .com bust was a fizzle out market. I had that chart up earlier. There was no capitulation move at the end. There were plenty of capitulation moves on the way down, which gave short-term bounces. So more often than not, bear markets finish without a ultimate capitulation move. They fizzle out. That means they essentially get to really good valuations and people are worn down, and then you start putting some good money to work based off long-term valuations, and then you generally get a pretty strong bottoming pattern slash reversal, not a capitulation reversal, just a long-term bottoming pattern. Yeah, and this looks like a short-term to medium-term bottom. You're welcome, Ted. I'm going to call it a day. Yeah, 2000 was sideways for some time, and again, if you want the let me get back to the Nasdaq. Then I really have to run. It's been a long, but if you look here, you can just even this was not. You had a little capitulation here in the at the end of '08, but then it was just a retest, and you got here's another example. Let me just go over this. What's this pattern in the Nasdaq from the '08, '09 bear? This bear market. What's this? This final thing wasn't really a capitulation. This was a capitulation move. This was a capitulation move. This was not. This turned into a double bottom reversal move. So that was more of a technical reversal, but the second one was not a capitulation. These two were, but they weren't the ultimate. This was the best. And then the safe buy, again, you're not trying to buy this or this. Because do we know this was the ultimate low? No, but you got a great signal right here. And then if you look at the .com end, you had a rally after lows, but this wasn't really a capitulation move down there. And then look at this. You started to build a long-term base. A long-term base. What do you watch again? Rally, pullback 50 to 62.5, retest. You started getting really good valuations down here. You got the macro turnaround, so you can keep a tight stop off these rotation moves back up. There was a strong percent B buy signal on a weekly right here after getting between the 50 and 62%. And then it was just managing a longer term stop. All right. With that, I keep forgetting I can hit those arrows. With that, I'm going to call it a day. Hope, yeah, you were right. See, in Amadeus, don't be afraid of sitting on more cash than less cash and waiting for again, you don't have to try to call every bottom. We don't have a great valuation bottom yet. Can anything still happen? Yeah, but don't be afraid of also missing a move. You know, a lot of money's chasing a move right now. You're welcome, John. At the bottom, valuations were good. Right now, valuations are sky high. Well, look where Amazon is still. And I know, and Amazon's out of full. Their Amazon Web Services is still growing, but Amazon before their massive run up, this was based off the close was 58, and that was based off of a lot lower price. So Amazon's getting boosted back up. There's still not a lot. One of the best valuations is but I think this still hasn't put in a long-term value. But you want to look at starting with some valuations. At least with a Meta, you got a P to E, or I mean, sorry, earnings per share back down to 220 and a P to E at 14. At least that's more sane than some of this other crap. But I'm not saying there's a great bottoming signal just yet. But that's, you know, you're at least at, because we could get another push down. But so there's short-term players for the gap fill in there. Jim Cramer is right. The bottom is in. The bottom's not in. All right. If Jim said the bottom's in, then the bottom's not in. We'll just leave it at that. With that, thank you, everybody, for being here. If you find this valuable, please do consider subscribing and ringing that bell. With that, I'll see everybody tomorrow morning. Remember, PCE numbers out an hour before the open, 7:30 Central. Don't be caught off guard by that. And we will see how the market wants to react to that. Maybe it will be all-time highs tomorrow. Huh? All-time highs tomorrow. What about that? Bear market wiped out in a single day. We're going to have the world's biggest gap up because PCE is going to come in 0.1% better than expected. There we go. See you later, Josh. Have a great one, everyone. Bye for now.